to the Maximilian channel, and in today's clip we're going to be taking a look at, do you pay tax on Forex trading, and if so, how much tax do you pay? Now, needless to say from the outset, I'm not a qualified finance professional or an accountant. This is just to bring my own personal opinion and personal experience of Forex trading and taxes, and hopefully give you some context and things to look out for in the future. But for any final financial decisions, always make sure you consult a finance professional, as my videos are just for entertainment purposes only. Now, whether you're thinking of starting Forex, whether you have started Forex, or whether you've been trading for a long time, I'm hoping to give you this video as a bit of value, just so as you can get your bearings and understand what you could potentially be looking for from a deduction perspective if you were to set up as a limited company. Just before we get started, if you could just smash that likes button, hit the subscribe button if you haven't already, and also click on the alert so as you're alerted for the next time that I post. Cool, so let's get to it. Tax. Now, I'm going to be speaking from a UK tax legislation perspective, as you can probably tell from my accent, but I know that there are quite a few similarities worldwide in similar economies. But this video in particular will focus on tax on your personal trading account if you were to set up through a limited company. Now, I have done 3 other tax videos, 2 of which were for FTMO traders, so I'll link the one up here for FTMO and personal taxation. I also did another one that covers similar to this video, but if you were just trading on FTMO and you wanted to do it through a limited company, and I'll link that video here. But as I said, on this video, we're going to be focusing on your own personal account and the tax liabilities that you may face there. Now, I have done a separate video that is for personal trading accounts and tax on that, but from a personal perspective, not through a limited company. Now, if you haven't watched that, there is a hell of a lot of information about that and loads of grey areas and really cool, interesting stuff, actually, if you're interested in tax, to do with Forex trading and tax. So if you haven't watched it already, I'll link it up here. Go and give it a watch, whack it on 2 times speed and just get through it. And hopefully that'll give you some backstory and a bit more understanding in terms of why this video could be right for you. So if you're a pretty good trader, the simplest and least grey way of managing your tax affairs is to run yourself through a limited company. Now, in your limited company, no matter come hell or high water, any profits that you make within that 12-month period, you will be taxed 19%. You would pay yourself an expensed, tax-efficient salary, and then on the remaining profits after tax, you could pay yourself in dividends for any of that amount. And of course, once you hit your personal account, then you would be owing dividend tax. Overall, it is very similar to the FTMO limited company approach too. So just as it gets in your head, let's just do a really quick example. In this example, I'm going to assume that you're just paying yourself the tax efficient salary and you're not expensing anything else, and you are going to withdraw all of the profits that you make. And to clarify the income tax thresholds in the UK at the moment, you have your personal allowance where you pay 0% on anything up to £12,500. You go into basic rate tax between £12,500 up to £50,000 in earnings, where you pay 20% in income tax, and then £50,000 to £150,000 you pay higher rate tax at 40%, and then at £150k plus you pay additional rate tax at 45%. Okay, so in this example, let's say that you've earned 100k from your personal trading account through your limited company. Now, as I said, first port of call is to pay yourself a tax efficient salary. In order to do this, you will need to register your limited company as a PAYE employer and also register yourself as an employee on the company. Now, I'm not going to go into the whole detail of what the most tax efficient salary is, but I'm just going to say that in this example, I'm going to use £8,788, as that is regarded as the most efficient salary to pay without your company having to pay employer contributions. So now you've paid yourself the £8,788 salary, and just note that this does need to be paid monthly at £732 per month. If you exceed that in a month, then you will open yourself to further liabilities, because the HMRC work it out on a monthly basis, not at the end of the year when it comes down to PAYE salary. So let's say you paid that, and now this in the year leaves you with £91,212 of your profit remaining. So on that amount, as we discussed, that will be charged a corporation tax of 19%. That would work out at £17,330.28. So with that taken off, you'll have £72,881.72 left to pay yourself. Now, you're most likely to pay yourself in dividends for the rest of the remainder of this money, and your dividend tax is worked out depending on what tax threshold you're in terms of your overall earnings. So anything in the basic rate taxpayer, you pay 7.5% in dividend tax. Anything in the higher rate and above, you pay 32.5% in dividend rate tax. So in this scenario, you've already earned your £8,788 salary. This means you'd have £3,712 left in your personal allowance, which is up to £12,500, which is tax-free. So you pay that money to bridge the gap, so as now you've completed all of your personal allowance. So given this, you're going to have £70,169.72 left. Now, you do get a 2k tax-exempt dividend allowance, so you would pay yourself that 2k tax-free dividend allowance, which will bring your overall earnings up to £14,500. So from your remaining profits, you've got £68,169.72 left. You have £35,500 left in the basic rate tax bracket, because you'd earn up to that £14,500 so far. So with that $35,500, you'd pay yourself, and you'd have to pay the basic rate dividend tax on that $35,500, which is 7.5%. All in, this brings you to about £2,662.50 in the basic rate dividend tax. This now leaves you with £32,669.72 left that you can pay yourself, and this would of course fall into the higher rate category of 32.5% in dividend tax. So dividend tax wise, you're looking at £10,617.65. So your overall personal tax liability is £13,280.15. So in terms of total deduction, after your corporation tax and personal tax combined, you'd be paying £30,610.43, or in other words, around a 30.6% deduction overall. So from your £100,000 profit, you would be taking home £69,389.57. Now, of course, granted, this isn't the most inventive way to run your limited company. This is just to give you a basic idea of what sort of deductions you could expect. Of course, you can expense a bunch of other things that come with the business costs of running your day trading business, but we won't go into that in this video. Now, although this wasn't the most tax efficient option for you in this particular example, it does leave the least amount to the imagination, and it does mean that you can sort of rest assured with some level of confidence that you can just draw a line under that year and know that you've at least paid enough tax, if not too much. If you've seen the other video where you're talking about an individual, there is a lot more grey areas and a lot more things to consider, and you're always kind of on the edge of your seat as to what you're going to hear next. Now, I know this was a simple breakdown that wasn't overcomplicated, and it was deliberately that way just to give you an idea. If CFD trading was your sole income and you ran it through your limited company and you earned £100,000, you would roughly take home about 70% of that, or just under 70k. Now, of course, go and speak to your accountant or get an accountant or a tax advisor or whoever you want before you actually decide and follow through with how you want to set up. But I do hope that this video has given you some value and some things to consider, and maybe some things to expect in terms of deductions to take away with you and then make a decision on which direction you'd like to go in. And now, as always, if you are enjoying this content, please just hit that likes up button, hit the subscribe button if you haven't already, and make sure you click on the alert so as you know when I'm posting my next video. I know they're only small actions for you, but it does make a huge difference to the channel and it keeps me pushing out this content. So if you are enjoying it, please just do those bits, and I love you forever. As with all the videos, please, I welcome all the questions below in the comments section. I'll try and answer as many as I can. Head across to my Instagram @MattToMillion for all of the daily updates, or if you want to message me on the DMs there, I do try and get through every new message within the week. So I do look forward to speaking to you on that. But if I don't speak to you before, have a great week, and I'll catch you on the next one. Take it easy.